focus on Hindalco. They reported a set of numbers that were pretty good, actually. I had a chat earlier today with the managing director, Mr. Satish Pai, and began by asking him about the potential impact of Trump's trade tariffs on the company's business, that is Novelis. Let's listen in to what he had to tell me.
I think I have been on record saying even before that any of these policies on tariffs are a net positive for Novelis, because Novelis is a US company based in the US, and most of these things benefit US companies. So, and for us in Novelis, the metal is a pass-through. So if the Midwest premium goes up, it goes to the ultimate consumer. So on one hand, we can say if the tariffs come in, it's sort of a positive for Novelis. But I also need to remind you that the last time in his previous term, when those tariffs were put in, within a short period of time, the Canadian aluminium tariffs were sort of given an exemption because there is too much dependency on Canadian aluminium for the US consumer. So I guess we'll have to wait and see. But at this stage, we feel there is no negative for Novelis or Hindalco.
Okay, got it. So it's either neutral to positive is what you're clarifying. Thanks a lot for that. Let's focus on the India business, and let's start with the aluminium first. You've got a double benefit out there. You're focusing on the cost side. There's a product mix as well that you're focusing on. And input cost, that's been a core focus for you even when times are a little bit jittery. Could you give us a guidance about the EBITDA per ton? How do you see it panning out? This time it was at around $1,450 per ton. Can you hold on to these levels, or should we be working with a couple of $100 lower?
No, I think that I'm quite confident that even in the fourth quarter that we are halfway through, we will be holding on to that levels of EBITDA per ton, because the LME is holding at 2,600 roundabouts. We keep our, as you said, a very tight control on costs. Power costs, coal costs are holding flat. So I think net operations are very stable. The margins should hold into Q4. Quite confident of that.
Okay, that will be music to the ears of your investors, and so good news out there. Let's take into account then the problem point, that is Novelis. It went down to around $406 per ton, but you all have said quarter four's EBITDA per ton will look something like quarter two, which would mean that you'll be closer to around the $500 per ton mark. I want to re-ask you this, Mr. Pai. Are you sure that it's going to be, that kind of a bounce back that we see? Quarter four being as good as quarter two, or could there be some kind of one-offs or something that could disrupt this? How sure are you?
Well, the one-offs we can never predict, but we are quite confident because Q4 is normally a very strong quarter for us. I have to remind you that Q3 is a holiday quarter in the Western world, Thanksgiving, New Year, Christmas, we take our annual shutdown. So if you see, the volumes had dropped down to 901 KT. That will jump back to 950, 960 in Q4. So getting 50, 60 KT of additional volume, that itself will bring the EBITDA back to the Q2 level. So fairly confident about that.
That's good news. And do you maintain your longer term guidance that, as your capacities come on stream, which will give you better EBITDA per ton? Your longer term guidance for Novelis is the EBITDA per ton moves to around $600 per ton. Is that maintained?
Yes, we have, I think even on our Novelis analyst call, we reaffirmed our commitment to get to that $600 per ton. And, quite a few efforts going on in reducing costs, improving efficiencies, working around different levels of scrap to mitigate the impact of the scrap spreads tightening. So, the new pricing is also kicking in 1st January of this year. So, yes, we are quite confident that we will be getting to those levels of $600 per ton.
Okay, let's focus on the steady business, the copper business. In the last few years, we've seen it move 500 to 600 crores per quarter to 700 crores per quarter. And this time as well, it was better actually than what the street was working with. Quarterly run rate, what should the copper EBITDA look like?
So look, this quarter first, it was better than what the street was expecting because sulfuric acid prices were better than what we expected. So the copper chain is quite a varied chain. So you have gold, silver, sulfuric acid, and as well as downstream copper products. So I think that in Q4, it should be around the 600 to 650 mark, because you have to remember now the new TCRCs will start to kick in. Whereas in the first quarter, we still have inventory that we will go through. But TCRCs are down dramatically at 5 cents per pound compared to 15, 16 that we had in Q3. So that will be a little bit of a dampener, but otherwise copper demand is strong. The value chain of gold, silver, sulfuric acid continues well. So it should be around 650 crores in Q4.
Okay, all right. Before we wind down, then tell us what is the outlook with regard to capex? How much will you all be spending in FY26? And what does it mean for the debt number? On expected lines, it went up marginally because of the capex that you're doing in Novelis. But what's the number you're looking at?
So this year we will be finishing at around 6,000 crores. As you know, we have already announced a fairly aggressive capex plan of nearly 40,000 crores over the next 3 years. So in FY26, our capex guidance will be more like 8,000 crores. And in FY27, it will probably go higher than that because we'll be putting in a new aluminium smelter expansion, a new alumina refinery, a copper smelter. So fairly aggressive capex plan of 40,000 crores over the next 3 to 4 years.
Okay, all right. So what does it mean for the debt number then? It's holding at around 41,000 crores, but you're throwing up a lot of cash as well. And as you said, some backward integration is helping you. So I wanted two numbers from you. Cost of production will go down, I'm guessing, because your coal sourcing will be coming in captively. So what could the savings be on that? And if you could help us out with an absolute debt number.
So the absolute debt number, you see, the net debt to EBITDA in India is negative. That means we have positive cash. In FY26, it will remain around that zero mark. So I don't think we'll have any residual net debt in the India business. Our estimation is that in FY28, probably the net debt to EBITDA in India will go to about 1 to 1.5 because that will be the peak capex time. So the one way to look at it is that the consolidated net debt to EBITDA in Hindalco will probably at the peak of the capex get closer to 2, but that's about it. Otherwise, it should remain well below 2.
Okay, surely that is Hindalco's management talking to us. As of now, the stock is quite flattish in trade. But